Kooky 2024, mate. Here we are.
Happy New Year. Well, I think it's a Happy New Year.
I'm not sure. I mean, there's a lot being said at the moment because, we'll talk about the inflation number, etc. But a lot being said. The first meeting's on next week in February, beginning of February. By the way, when's the new rhythm going to start? The new RBA board meeting rhythm?
The rhythm has started after this one. So next Tuesday, the 6th of February. We've also got the change in what the RBA does. They make their announcement, rates steady, whatever. They simultaneously put out their statement on monetary policy, which is that 70-80 page document, which has their revised forecasts. And the RBA governor, Michelle Bullock, gives a press conference.
Perfect.
And so that's the first one of those. Then
So
we
the
move
6th
to
of February will be the first one.
the first one. Then we move to that 7 to 8 week time frame. So instead of the first Tuesday of every month, what they're doing is 7 or 8 weeks. So the one after that's the 19th of March. Some speculation about what they might do there, but then the really big one, we'll talk about this in the next little while, is the 7th of May. So they don't meet in April. The why the 7th of May might be the hot topic, and we'll get there through the course of our conversation, is it's about a week and a half after the next inflation number. We'll know what the US Federal Reserve is doing with its interest rates. We heard about them this morning. And we'll have a bit more information on the unemployment rate. So, that's sort of the timetable where they're having less frequent meetings. But when they announce what they're doing at each meeting, there's a ton of information and the governor has a press conference.
Right. Okay, got that. And now, we had some data come out in January, which is important data. Just tell us what data, which off your board, we're not going to look at your board, but off your board, which bits of data came out? We
had a lot of information through even late December, because we didn't have our January get together. We had confirmation that GDP is slowing down. We had the 0.2%. It sounds like a little while ago, and it was in a sense, but don't forget that data came out after the December board meeting where they held rates steady. So we had a 0.2% GDP. That's pretty weak. We're used to GDP per quarter growing at about 0.7, 0.8. So you get a 0.2 after a 0.4 the quarter before that, weak. The economy's weakening.
0.2 sort of indicates if you do something very crude, but it's sort of like it's nearly less than 1% GDP.
Correct. So we're really weak.
Which is very interesting when you look at the population.
Well,
given the immigration number, we have negative GDP per capita.
Person, per capita, yes, and we have for 3 quarters in a row. That immigration inflow, if we can call it that, when the borders reopened, what was that, 18 months ago, is about 0.6 per quarter. So if we get 0.6% GDP growth, you might think, that's not too bad. But hang on, it's only just population. It's only people coming in, and when they come in, like you and me, they go to the grocery store, they need a house to live in, they either get a bus or a train or buy a car, they spend money in the economy. So it's per capita, which is sort of like the living standard measure, is dead flat, but with 0.2 it's coming back down. The other thing which was a bit of a concern over the last few weeks was we had the unemployment numbers, and unemployment 3.9%.
That's the highest in a long time.
Highest in well over a year. And remember that the low point about a year ago was 3.4. So we're up 0.5%. And the thing that was a bit spooky, if I can use that term, was that in December, total employment fell by 65,000. Full-time employment fell by 107,000. Now, those numbers can be choppy from month to month, but if you sort of put through a moving average, full-time employment has been falling since the middle of last year on average, trending down every month up, big month down.
Which means that
so
employers
less full-time jobs.
We're saying, look, I can only give you part-time work.
Correct.
Yeah, because I probably haven't got enough money.
Yep. So instead, when business is booming, mate, I want you to work full-time. We're flat out. We're doing everything. Business is a bit soft. Oh, look, can you take Monday off? Yeah. And I won't pay you, Can I take Tuesday off? So the full-time guide for the health of the labour market and the economy are absolutely critical. So the two go hand in hand. Unemployment going up, full-time employment going down. So that was the other really big issue. And of course, the inflation numbers, were really surprising, certainly surprised the RBA, 0.6% in the quarter. So inflation, the lowest in almost 3 years.
Quarter to December?
Yep, the quarter to December 2023, and continuing that downward trend since the end of 2022. So inflation's coming down.
Which, by the way, you and I expected.